Hello and welcome to CMC Markets Trading Outlook for the week of February the 22nd, 2016. My name is Colin Szyszynski, Chief Market Strategist. This week I don't really have one single overriding event or theme that's driving trading through this week. It's fairly light for news, and but there are some big things in certain areas. So I think what we'll see is it's kind of a hodgepodge of things that that are going to affect trading across various markets. As we wrap up this week, the week of the 15th, we're seeing that markets are pulling back a little bit. Nothing huge. Moderate declines for U.S. indices, and what just looks like a general trading consolidation after a big move up. We've got the Dow down slightly, the Nasdaq up slightly, and if we look here at the charts for the US 30, we'll see we've had a nice lift up off the bottom, good solid double bottom, running into Fibonacci resistance here, and just kind of leveling off below that. I think we're seeing across a lot of markets that we enter the new week with markets kind of just digesting some of the big swings we've had lately. The big sell-off in January, as I said, the double bottom, successful retests, oversold conditions, and the bottoms, and then in the last week, the confirmations that we're starting to get some recoveries, bounces back up. Also improving RSI indicators and a lot of other technical signals coming together to suggest that things are improving, but at the same time, we haven't gotten through all the things that spooked the markets, so there's still a lot for traders to digest. Perhaps the most clear example of this is in the gold market, where we're seeing here, we've had a massive rally for gold up off the bottom. This is a combination of the rollover of the U.S. dollar as well as the fear trade when the markets were collapsing. But look at this. So now, what are we seeing? Lower highs, higher lows, symmetrical triangle. This is a consolidation pattern. The underlying RSI trend remains solid, but our RSI is overbought again, so we're likely to see gold continue to trade sideways either in this triangle or in some kind of channel, say between 1200 and 12. That's 1240, that's 1260. So gold in the near term and markets in general, we may still see a digest sideways. The one market in another market that's still in a state of flux is crude oil. And crude oil here, we're seeing that has kind of moved into a trading range. Let's bring this out a little longer though. It's moved into a trading range here between about 2660 and let's call it 3260, and it's kind of sitting in the middle here in and around 30. Some days it goes above 30, some days it goes below 30, and we're seeing the same with the RSI above and below the 50. This is a shift into a sideways trend. This clearly is a shift into a sideways trend. Double bottom, hammer candle, engulfing breakaway candle here. So it looks as though a lot oil, whether we see it in oil, whether we see it in indices, look like they're at least bottoming out and are trying to turn the corner, but haven't quite broken out yet. So we'll be watching for news through this week to see what happens with all of that. The thing though about this week is there's not a lot of news in terms of major economic reports. The big ones are later in the week: UK GDP, US GDP Thursday, Friday. Early in the week, we get flash purchasing managers for Japan, US, Germany, France, Eurozone. So that'll kind of at least give us an idea of whether of how economic momentum has continued into February. That's the first indication of that. So we could see some impact of that on the markets. The other thing we might see moving the markets on a broader scale in Europe is the Brexit negotiations, which, as I'm talking now, are still continuing. This is the Friday. By Monday, who knows? We might get a deal, we might not, and the markets would react to that accordingly. We'll see what all comes out and what deal, if any, is reached. So we could see some action there, and on that basis, I'll just show the UK 100 here. Same kind of thing, more or less. This case, it had a positive RSI divergence at the low, but it still has not busted this channel of lower highs and lower lows. So, and it wasn't able to hold 6,000, dropping back. So this one could still may still struggle between Brexit concerns and the oil price. If oil price continues to trend sideways, the UK 100 may also continue to do that. So, I just wanted to talk about some of the other events this week. And one thing, actually, I'll get on to first is the Fed, and then I'll move on to earnings. So, what we've got going on with the Fed now is that there's been a lot of talk in both directions about they seem to be wanting to keep their options open. A number of them. There's a hawkish faction that thinks they should just continue with the gradual rate increases. That the recent market volatility is common during the transition to from a dovish to a hawkish Fed, and that they haven't seen any reason to change. Others are taking a more neutral approach and saying, well, we'll just wait and see what the data tells us. And then there are some that have gone a little bit more dovish, backing away from the four hikes in 2016 to perhaps there could be less, and perhaps the next rate hike could be delayed. Now, the thing to realize is that there's a few things that were driving this. One was the market volatility, particularly with regards to China. As I've shown, that's starting to subside a little bit. Overseas economies struggling. Well, they're struggling, but they haven't gone off the rails yet. So that's still iffy. But the latest one that people were bringing up was the inflation concerns, and concerns that falling oil prices could lead to falling inflation, could then, or even deflation concerns could keep the Fed on hold. But however, today, U.S. consumer prices came out. They were up. They were above expectations. So this fear of deflation doesn't seem to be there anymore. That puts a March rate hike back on the table. Because of that, we could still see some choppiness back and forth this week. We do have a number of Fed speakers talking. Here on Friday, we had Cleveland Fed President Mester was talking. She's a hawk. She stayed hawkish. Next week, we have on Tuesday, the big one is Stanley Fischer, the vice chair, speaking. He had been hawkish, has moved back to neutral to dovish. We'll see which way he's leaning today. We have some other ones that are non-voters speaking, but later in the week we get permanent governors on Friday, Powell and Brainerd speaking, so they could be significant as well in terms of giving a read on which way the Fed's thinking. With the March meeting now is only 2-3 weeks away, so people are going to be starting to look ahead to that. That could influence trading in the U.S. dollar, and through that into gold and other currencies. We also could see that have an influence on trading in the stock markets. So keep an eye on that this week, because and especially with a vacuum of hard numbers this week, we could see more of a focus on Fed speeches and which way the wind is blowing as we head towards the March Fed meeting. The other thing I wanted to talk about this week are earnings reports. We're still getting some. The main focus this week is on U.S. retailers and Canadian banks. I'm going to start with the Canadian banking sector, and what we want to watch for here. I'll put up the chart for Bank of Montreal, who's the first one to report. And basically, some of the things we're watching for with this is how are they continuing to do? How are they managing the transition to the lower oil price and the lower loonie? What is going on in terms of personal and commercial banking? Personal banking, but watch for banks' exposure to Alberta real estate, where house prices have been dropping along with the crash in the oil sector. The other side, commercial lending directly to oil and gas companies. How is that going? There's been a lot of worry about that with the shale producers in the United States, particularly Chesapeake. Does that spill over into Canada as well? We'll see what happens when the banks start talking. Overall, bank shares have been kind of flat to lower for most of the last year. We're seeing this BMO trading middle of a 69 to 81 trading range, and if I just come down through some of the others here. CIBC, same sort of thing, 85 to 105 sideways range, kind of sitting in the middle of it. So we'll watch for also earnings, beats, and dividends. Do the banks break out and perhaps trend towards the top, or do they roll over, trend back towards the bottom of these channels? We also have Royal Bank this week, same sort of thing. It's been drifting lower, but seems to be bouncing up out of a double bottom. And TD Bank, if I can find it here, there it is. TD Bank, same sort of thing, big sideways channel between about 48 and about 58, and it's kind of sitting in the middle of this. So we could see some swings within these ranges on the Canadian banks as their numbers come out. Other one to watch for is Valent Pharmaceuticals is reporting earnings on Monday night. This stock's already been hammered from 350 down to 100, 150 range here. So, but as a big high price momentum name, it could be volatile around its earnings report, potentially creating some trading opportunities. Now looking over to U.S., we have the retailers reporting this week. We had the week ended, we have Walmart report, not so good. It was rallying quite nicely, and then kaboom, had the bottom ripped out from under it there by some slightly disappointing earnings results. The two big U.S. retailers reporting this week, one is Macy's. Macy's has already been hammered for a 50% loss from about 72 to 36 before it's kind of stabilizing here around 40. And then the other one we'll be keeping an eye on is Home Depot as well. And Home Depot has acted a little bit better. It's kind of held on to its gains over the last few months, but even here it's been kind of weakening from 135 back to 110. So be monitoring the Home Depot as well, since it's a Dow stock. And that kind of wraps things up for me. I'll note here that really when I look through this, there's not a lot of news out there. Just a couple of other things. I'll show quickly a couple of currency charts. We have still been seeing defensive capital flows. Keep an eye on dollar yen, may remain active. Look at this. We've had a since the Bank of Japan meeting, a big sell-off down to 111. There was this what may or may not have been an intervention by the Bank of Japan, pushed it up to 115. That didn't last very long. It's still trending lower. U.S. dollar still weakening. Remember, dovish Fed likely to weaken U.S. dollar. That whole talk about negative interest rates seems to be a bit of a red herring here, but at the same time, I also think they've left that as a threat to the other central banks to say, that if they start going too hard on negative interest rates, that the Fed could retaliate against them in some way. The Fed doesn't want the United States stuck holding the bag and getting the impact of everybody else's devaluations. So keep an eye on yen. It's in the middle of this 111 to 115 range. Could retest the bottom here for a double bottom. We'll see what happens there. And I'll just highlight euro dollar. Euro dollar continues to consolidate here, sitting around 111. Supports coming in at the 200-day average near 110.60, and some upside resistance as well. We'll keep an eye on the pound. The pound could be active coming out of the Eurozone summit. Here, we'd see it was starting to recover. It started to drop back in recent weeks. We'll see if it stabilizes here at a higher level above 142, 143.50. And there's this Fibonacci cluster here in and around 145. And finally, we'll look at dollar CAD, which has started to turn back upward again. Canadian retail sales was quite weak with the warm winter in Canada. Sales of winter clothing and equipment didn't come through, and we're seeing a bit of a bounce here in crude oil. Has been softening. Even then, it still remains in its downtrend, and but we could see it start to level off, go sideways. This is around 136.50. This is around 139, give or take. In that middle, there's around 137.55. So we could see the loonie start to trend sideways here. And that pretty much wraps it for me this week. As I said, it's not one big thing. It's a lot of little things, but we'll still probably see a number of opportunities from trading across markets.